HCL Tech numbers that are out, wherein this time around the company has reported a revenue of 26,296 crores, and that's a fall of 1% on a sequential basis. When we talk about the profit, there then the disappointment coming in, where the profits are actually down 11.5% on a sequential basis, with the company reporting 3,534 crores onto the profit figure. When it comes to the margins of the company, then at 18 now, we were expecting an EBIT margin of 18%, and versus that figure, the company has reported an EBIT margin of 16.7%, so a big disappointment on that front as well. And EBITDA is also down 8.3% on a sequential basis. So those are the first cut and the first numbers that are out from HCL Technologies. In a couple of minutes from now, we'll also get the press release where the company will share the attrition as well as their guidance, whether they stick to that or not. But with this, let's go across to my colleague Anisha Jain, who is joining us to give us some more details on HCL Tech earnings. Take it away, Anisha.
Well, it looks like a very weak set, Shrishti. As far as the top line is concerned, there itself, there has been a decline which the company has reported. Nobody on the street was actually expecting a decline. There was a growth that street was penciling in anywhere between 0.5% to 1%. So quite a bit of disappointment on the top line itself. As far as the margin is concerned, I'm just looking at the headline number that we have. That's around 16.8. Again, a major miss coming in, and that's the reason you have profitability declining by double digits this time around. It seems difficult that the company would be able to hold on to their guidance given the kind of performance that they have already done, because there's a decline as far as the profits is concerned to the tune of 11%. So that's definitely weaker than what anybody on the street was expecting. We were working with a number of a decline of anywhere between 4 to 5% as far as the overall number is concerned in terms of the HCL Tech earnings this time. I'm looking for more details. I do not have much data as of now, but looks like it's a bit bigger disappointment coming in from HCL Tech, given the fact that street, if you look at the stock price, of course, over the last 5 to 7 trading session, we have seen a bit of a cut in the stock price to the tune of around 5 to 7%, telling you that the street was already penciling in a weakness. But if you look at the YTD chart, HCL Tech has actually performed much better than the frontline peers, the likes of TCS as well as Infosys, because the management commentary about 6 to 8% growth for entire FY24 was something that street liked. They had already trimmed it down, so 6 to 8% was considered realistic, and the margin band of 18 to 19%. Now there's a question mark on both, given the fact that their margins have come in below 17%. Clawing back to the mark of 18 to 19% would not be an easy task. I do not think they have taken a wage hike this quarter as well. So if you go to Q2 and Q3 and the wage hike comes into the play, the margins will actually drop to 14 to 15% as well. So I don't see much levers on the upside as far as margin is concerned. I'm not sure, Shrishti, if we have the guests available, and let's take their first opinion as far as the reading of the number is concerned, because for now I don't see any silver lining. Of course, we are waiting back for more details in terms of the guidance as well as the order book details, but the headline numbers do not look impressive at all.
In the quarter gone by, the street was actually happy that the company has given quite a realistic guidance for them for FY24, where they have given a guidance of revenue growth of 6 to 8% in the constant currency terms, and when it comes to their services business, then 6.5 to 8.5% of a YoY growth for FY24 is what the company has highlighted. 18 to 9% of EBIT margin is what they have guided for FY24, and other than that, if we look at this particular number, then it looks like that 18 to 9% is something that the company really has to work to get to those levels. Anisha, coming back to you, you wanted to add something more onto the earnings.
Yeah, no, I just wanted to highlight, given the fact, the context of TCS's earnings, which is, yes, slightly weaker on the top line, but it's not a howler or a big miss coming in, right? So for HCL Tech, it looks like a particular case wherein the ER&D segment, which has been weak and was expected to show a sequential decline, that might have come into the picture, and the products and platform business too might have been weak. That's my expectation, because as of now, it does not look as an impressive set. The valuations of the stock had already run up to 18 times the forward earnings. This is already at the higher end of the long-term average for the company. So in terms of the valuations reset as well, there was that risk on the downside. Yes, you can say that in the last 5 to 7 trading sessions there was a decline already, but my guess is street was not preparing for a double-digit decline coming in on a sequential basis in profitability. They were not ready for almost a 200 basis point decline on the margins, and yes, the top line declining. I don't remember seeing any estimate on the street talking about a huge decline on the top line itself. So for HCL Tech, does not look like they have delivered. And my guess is when we do get that press release, which we all are waiting for, there might be a revision perhaps on the guidance, or otherwise the ask rate for the second half of the year will be very, very tall. We were just hearing the commentary coming in from the TCS management as well. They are non-committal about a recovery in the second half. At least in the last quarter, there was that murmur, there was that expectation that the second half of the year might be better. For now, they are not committing to a double-digit growth. They are saying it's going to be a tall order.